The concern that people have is the economy is now growing 4%, inflation's picking up, and it's not so much about rates being that high now, it's how high could they get. The Fed is seen continuing to raise interest rates going forward, and I think the concern is more if the economy stays strong and inflation continues to creep up and the Fed keeps raising rates, is that going to eventually lead to a recession, which could be bad news for stocks. And some of this is just a healthy excuse for profit taking. We've had great returns the last few years with really very little volatility. So some of this is just a little bit of catch up. Stocks are valued based on interest rates and earnings. And we know interest rates are moving up a little bit. That means that's not great news if it goes too far and happens too quickly for stocks. And so it's really important that the profit piece of the picture be solid. It's been really strong. The concern is just can that keep up? The savers who have had to endure record low rock bottom interest rates for years are finally getting a little bit of relief in very short term. 1-2 year treasuries, money market accounts, they're now getting 2%, which is 2% more than they were getting a couple of years ago as the Fed keeps raising that short-term interest rate. On some of the longer dated bond funds, it's more 3.5%, 4%. The market's been returning 15% a year returns the last 5 years on an annualized basis. I think people need to get their heads around the fact that things are probably going to be choppier and it's going to be more of a single-digit world.